Morning everybody, it's Chris here from Serene Education with the 4 majors and latest update for the 15th of May 2012. Hi guys, just going to go over the 4 majors starting with Euro against US on our daily chart. Let's have a feel and see what's been happening recently. A lot of downside momentum in recent weeks. This has pretty much gotten stronger as you've headed past the 1300. 1300 mark here being a very strong support and resistance in the past. Just want you guys just to see this so you can see exactly how strong this price support was at 1300. Notice here, January going into the Feb, March, April, a lot of support through here, and then we've had this break. So psychologically, not a very good term here in terms of where price is trading at the moment, because it's trading below this very strong support. That just tells you the market sentiment is looking favorable, negative. So where's it likely to go to? Well, we've had a starting point here, and we've had the little breakout. Then we had this little pause, this pullback to the upside, and you can see that 100% would be our initial target to the downside, and that coincides, funny enough, with a price support and resistance there at 1265. So ultimately, the next protocol for price would ideally be down here at 1265 or 12600 as price support. Okay, so as things at the moment stand, everything's in our favor. Moving averages above price in order, 2050 in the institution. However, the most important part is our template is telling us we should be looking for nothing more than selling opportunities. Red arrow, red candle, and the CTC on the other side is red. So you can see here, as long as price can stay below the 38.2 pullback going into the US session today, then we should see potentially our next target being 1280, followed by 1275, followed by 1265 long term. Next one is sterling. Let's have a look and see what's been happening at cable. Upside movement recently, a nice break above 1600s, very psychological strong support and resistance level, major resistance level for some time until we had a breach above it, and price rally to the upside, and that's rally pretty much going above a price support and resistance level and heading higher. However, since then we've seen a price pullback, which is indicative of a breakout. We want to see a breakout pullback and then a continuation in the upside trend. You can see this is the low that we saw in January. You can see higher swings, swing high on this trend line to the upside. So where's price in relative to the trend line? It's quite close. Price has been making its way back towards the psychological level, and in doing so, we could see potential for price action to bounce here. Ideally, that's what we'd like to see, because then it'll be in favor of the upside trend. It'll be trend indicative. In this case, we are to the upside. CTC is very much blue across the board. However, just recently we have had red arrow and red candles. However, we don't have the red on either side. That's primarily not the case because we're still trading above a major resistance level, and in doing so, it is positive. Once we get below 1600, then we should see the CTC on the other side going red, which should tell us this is more of a bearish stance than a bullish one. At the moment now, we're trading below the first part of this little breakout here of the 20 period moving average. And where's price likely to go to? Well, this is the start of the overall trend to the upside. Okay, so this will be your low. So you're looking for a fib retracement here, and that's the high. The low of this move and the high of this move. And now we've had a pullback. Now we've had 23.6 being tested, and we failed to see price bouncing on that. We saw a break of the 23.6. The ultimate next target would be 38.2, and then we saw price moving towards 38, and then consolidating to 38, and then bouncing this in. Break below 38 would take us to 50, and vice versa. However, you can see that 50% being a strong support area. We've seen price now consolidating in this bandwidth between the 38.2 and the 50 and moving sideways. If it does so, it'll move sideways towards a trend line and still maintaining above this psychological area here, or major resistance level at 1600. We could see price bouncing higher. In order for that to happen, we need to see a bullish engulf, and to confirm that there's more buying sentiment now than selling sentiment, because at the moment now we've seen a lot more selling than buying. This is still happening above a very strong area of support, which happens to be the 1600. As long as price is maintaining above those levels, above a major resistance level, then there's still bullish momentum. This is bullish consolidative, okay? And as long as it maintains above 1600, then there's more likelihood of price to move higher. The quicker it gets below 1600, the more favor it is looking to be bearish. Okay, so if we want to see upside movements, then 38.2 needs to be breached. A nice bullish engulfing here, and then we should be targeting 23.6 over the next couple of days, and back up towards 1630. Failure to see that, and we see price failing to break above 38.2, then we should potentially be looking at 1606 back towards the 50% line as our first target for the foreseeable future. Break below that, would see 1600 being targeted, and doing so we should see the CTC on the other side being turn red. Swiss franc up next. Good old Swissy. What's that been happening? US dollar climbing against the Swiss dollar. Sorry, the Swiss franc. Apologies. Coffee not kicking in yet. But in doing so, we've had a lot of momentum to the upside of the past couple of weeks. Everything's in our favor. Moving averages below price, and most importantly, our strategy template is in our favor. Blue candles, and most importantly, the CTC on the other side is blue. Break above a psychological 920 resistance level here. Seen price move higher towards to an area. I'm going to just zoom out so I can show you to the 61.8. And in doing so, we're trading above a major prior support and resistance level, or consolidative area here at 61.8. You can see here hesitation. Very hesitant around this area. Price has moved away, pulled back, etc. So price is trading above its the hard right edge where we make our money. Price has to maintain these levels above the 61.8 or above this area here of prior resistance, and in doing so, finding support. So we want to see one or two things: a bullish engulfing, a nice hammer to tell us yes, we are upside favor above this area to maintain these this momentum, this bullish momentum, and in doing so, where is price likely to go to? Well, all the way up here to 960. That's on its target. A lot of clean air up towards that level. So as long as it maintains above 61.8 or above this area here, it's 93500, then price should be looking for favoritism to the upside, and we should be looking at 960 as our overall target long term. Last pair of the day is US dollar Japanese yen. Let's have a look. Upside movements since February, massive move to the upside, however capped by a very strong price support and resistance level at 8400, and in doing so, a lot of indecision candles followed by bearish engulfing, and then price moving to the downside. And since then, we've seen price reverting all the way back towards a prior breakout area here at the 80 mark. Very strong area. If I move back, you can see 80 here on the chart. Price support and resistance level. Price actually consolidated, hesitated this bandwidth for a long number or period of months over a given time. Same at 84. A lot of hesitation at this area here in the past. And you can see that price actually clearly hesitated just recently at that area. Price failed to maintain these highs, and we saw price revert to the downside. And in doing so, tackling previous fib retracement areas. We use fib tools to tell us where price is likely to test or pull back towards. And you can see from these highs here, we headed back down towards the 23.6% and maintained these areas. I failed to build on that area. A lot of time, price actually maintained above the 23.6, but it failed to give us a nice genuine upside candle to tell us that 84 is going to be back on target again. In doing so, failing towards 38.2, which formed a new swing low, and failing yet again at 38.2, and doing so, forming a swing low trend. So the trend line looking negative to the downside, and since then we've seen price reverting to the downside. Swing low, swing low, swing low, and now what we've found is price actually trading below a very strong price support and resistance level here at 80. And in doing so, more price action happening below the 80, which happening price support. So this is going to be, could or confirm that a price support is now looking like to be a new resistance level, area. And you can see a lot of indecision here. It's consolidating, not a hell of a lot of price action movements, and consolidating on the underside of a price support and resistance level. And as long as it maintains this indecision on the underside, then the decision could end up being more bearish. A lot of indecision. Spinning top, doji, bearish, bullish, spinning top. A lot of indecision here, guys. A lot of days where we've had no trading whatsoever, very indecisive, no buying and selling whatsoever, very indecisive from the market makers. We want to see a decision. It's looking more favorable bearish sentiment because it's doing everything that. We come from a high, we're swinging low, which tells us that the trend is negative. Swing lows depicts negative trend line. We're trading below the 20 period moving as well as the 50. These have crossed recently, so that's another indication this is negative. We're trading below a major support and resistance, which happen to be the 80. That's also another negative. So there's more stacking up in favor for bearish sentiment. We need a nice bearish break from the downside, a pull off the underside over here, nice bearish engulfing under this, all of this indecision here, the underside of this 80, and they should be targeting 79 if that was the outcome of the case. And then back towards the 78 or 78.50, back towards the institution would be our next target, etc., etc., etc. So this is looking more favoritism negative for the time being, We want to see a decision candle because we have a lot of indecision. Give us that decision candle. In this case, for this to be a bearish setup, we want to see a bearish engulfing. That's all that's missing from this chart. Hey guys, I hope you have a fantastic trading day today. Please look at your news to see if there's anything that's going to actually factor into price action today. There's a lot of news out today, so just be aware of it. Until then, trade serenely.